What's going on, y'all? Welcome back. I know it's been a while, but I'm back today with some great content. Something I really want to show you guys. Something that I've been using from ICT since the beginning. And now I'm actually like applying it a lot more consistently. And it's been giving me even more consistent results than what I was already getting from using his other concepts. But I'm here today to show you guys how I was able to turn $500 into $11,500 in about 3 weeks on a live account. And before I even get started, I just want to let you guys know that I am not a financial advisor in any way, shape, or form. I'm just here, coming to you guys, as a friend, not as a financial advisor, using ICT's concepts on a live trading account. I'm not promoting anybody. If you would like to study ICT, if you heard about him, I'm just here to show you that his concepts really work. If you properly identify and properly apply them in the market, you can see live results and great consistent results if you put in that work to doing it. But for those who are just looking for a easy 1 2 3 system, give me in, give me out, and profit, that's unrealistic, right? Every system has its flaws, or should I say, you have the flow, you are the flow in your system. If you're not consistent, then your system's not going to be consistent. All right, simple as that. Wins and losses do come. There is no system that gives you 100% accuracy, because there's always going to be a fault within yourself that's going to disrupt your consistency, and it happens from time to time. But overall, the goal is to be profitable. All right, so before I even get started, let me show you guys. Right, I am on a live account. All right, this is KOT. I am not promoting KOT as my broker. I just use it because it's great for me. But here you see live KOT. I don't know if you guys can see that. But let me go right here. Right, the account says 11,000 596.86, so about 11,600. And I was just using this concept that I'm going to get right into right now. And it's very simple if you understand ICT's concepts. If you don't, then I recommend you go to youtube.com and look up the Inner Circle Trader. His name is Michael J. Huddleston. Fantastic content that he puts out for free. And it's really changed not just my own life, but also many of other people's lives as well. So I just want to show you guys. Oh, I didn't even connect my chain. Hold up. Excuse me. All right. Let me put the latches on, because I didn't have the latches on. I thought I put them on. All right, there we go. Yes, this is the real chain, y'all. All right, nothing fake over here. But let's get started. So I'm gonna be going over this week's price action, how I was profitable this week on US 30. All I trade is US 30, if you know who I am. I just trade the indices. So going into it, what a dealing range is basically, seeing where price takes out buy side and sell side liquidity, and where the displacement is created, in certain conditions. So if you're bullish, you want to look for price to take out sell side, then buy side, and then trade back down into like any fair value gaps and a discount. Vice versa for sells, but it'll be a premium price range instead of a discount. So just using that, ICT, he goes into a full breakdown on his channel. I'm actually gonna let me actually go to it right now, just so you guys can see which which video to actually watch. So here we have the ICT dealing range, and there are 2 videos on it. He did his most recent video, was 3 months ago, right? The ICT mentorship topical study dealing ranges. That's one you can watch. I definitely advise you watch. And the second one that he put out 2 years ago, this is the advanced IPDA, which is intraday price delivery algorithm insights. These two videos you want to couple together, you want to watch them, and you want to go back into your charts and back test them immediately. Just so you can train your eyes to seeing, exactly what was being presented in that video, right? But without further ado, let's get into it, right? I'm not going to be going over, I started the account on September 13th with the $500. It hasn't even been a full month just yet. This week will be a full month, and so far just using this one concept is been extremely profitable. So I'm going to go over about 3 examples today in this one video, so you guys can have like an understanding of how I applied it. So now what I'm simply going to be using is the bar replay tool. And I'm going to drop down to the 5-minute. Right now I'm on the 15-minute. So what you want to do is identify, where price takes out, highs, which is taught as liquidity, buy side liquidity, and where price takes out lows, which is called sell side liquidity. Right. I'm not going to get into, depth about the difference between the two. Just understand if it's above the highs, that's buy side liquidity. If it's below the lows, that's sell side liquidity. If you want to understand more about liquidity, go to ICT on YouTube and study it. Right. But with that being said, what I'm going to do is just mark off where price takes out the highs. Yes, it doesn't have to be a specific high as long as price takes out highs within a range, right? Takes out highs, creating a range, right, to the downside. That's what you want to see. So it doesn't matter what specific high and over here that you see getting price taken out, right? All of these highs can be considered buy side liquidity, right? There's liquidity above and below every high and every low. So it's not one specific high or one specific low that trips up price, unless you're looking at a a higher time frame perspective. The higher time frame is a lot more significant. There can be moves based off of previous weeks high or low getting taken, the monthly time frame highs or lows getting taken, or the yearly highs or lows getting taken. But that's on a higher time frame. We're looking at this from a intraday perspective, right? Because that's what it's based off of. So now going to mark up these highs, right? We see that the last high that price takes out is this high right here. And the BSL just stands for buy side liquidity, right? For those who may be asking in the comments, I'm just letting you know here, right? BSL stands for buy side liquidity. And simply now we want to look to the left and look at the lows that are taken out. Right, and as buy side liquidity stands for BSO, sell side liquidity stands for SSO. So now we have our range, right? Buy side liquidity is taken. We have sell side liquidity taken. Now, what's next? ICT teaches if you're looking for sells, you want to sell in a premium market, right? You don't want to sell when price is low. You want to sell when price is high. And using this concept allows you to see what fair value gap, what order block is in premium or discount for optimal buy or sell entries. And that's what I use it as. So here, right, we have our dealing range, right? And above the 50% is considered premium, right? In a selling in bearish conditions in the seller's market. So what I like to do is, if I don't have a fair value gap on the 5-minute, which I do right here, but I like to use the 1-minute time frame for my entry. What I do is I only take entries that are in a discount price range or a premium price range. So always above the 50%, that's when I enter the market. So here, right, FVG just stands for fair value gap. And here at the 62%, right, 62, this is considered a premium price range. I'll put my stop loss above the high. And as price trades up, giving me a drawdown, that's when I add more positions. I'm not afraid of, having a 96-point stop loss or even a 100-point stop loss, that just tells me, I'm able to add more positions as price trades higher. And just using this concept, I've been seeing that whenever price does trade higher or lower, giving me drawdown, I find it a lot easier and a lot more comfortable to add more positions to my trade because I have confidence in it. And for this, what I like to do with my current system is target the minimum 300 points and the max about 500 points. But if the market gives me more than 500, very quickly, I'll take that too. Don't got a problem with that, right? So now in this example, all we're watching and waiting for price to do is trade up into a premium market for us to go short, right? This is obviously using hindsight. Yes, I have actually traded this setup live. I have videos that I do. I'm actually going to, you guys can see it on my Instagram. Me catching these live entries. You see the drawdown, the no drawdown entries sometimes, but you see like the big moves that I catch, on a day-to-day basis throughout the trading week, very consistent. And that's because I'm using this concept, right? So I'm using the dealing range plus the fair value gap concept, right? The fair value gap is where I find is where I get my entries. The dealing range is what I get my narrative based off of. So if I see a bullish dealing range, then I'm gonna look for buys. If I see a bearish dealing range, then I'm gonna look for sells. So now we just wait, see how price reacts in this. Right, price enters us in the trade, and now we just watch price. So now I'm gonna go to the 5-minute, and as you see, stop loss hasn't been hit just yet, right? And we see price starts to break down. So I'm gonna go to the 15-minute. All right, and this was the NFP day on Friday last week, on the 7th of October. And as you can see, right, price never traded close to stop loss. Right, price never even traded back into drawdown after giving, about 200 points of profit. So this is what I've been using. Now I'm gonna find another 2 more examples for y'all, just so you can see how I look at the market using this, this this concept. All right. So now what I'm going to do is go to the 1 hour. Right, and I'm showing you trades that I've took this week. All right, so again, none of this is actually hindsight. This is all just me looking at price and actually taking these trades. I'm going to show you that in a minute. So now here's a buying example. I believe this was it. Yes, this was it. So same thing with sells, right? You want to sell in a premium market, right? That's selling high. And when you're buying, you want to buy low, buying a discount, right? It's cheaper when you're buying in a discount. You save a lot more money. Like, let's say you go to a store and you have coupons and plus like there's sales going on, you're more likely to buy, the items that have the coupons and that's on sale than to buy the items that are, higher in price than usual. So that this concept allows you to see what's premium, what's discount for buys and for sells. So here, same thing, right? We're looking for buy side liquidity that is taken. Right here, we have buy side liquidity taken. Right. Also for my retail traders out there, right? You have your resistance right here. If you would have sold, you would have had a stop loss hit if you trade with a stop loss, or you just would experience, drawdown heavily. So here, right, we have buy side liquidity taken. And at this time of price action, I was looking for price to be bullish, to trade into this purple area, right? For me to take profit at and to reverse my position. At this time, I wasn't able to reverse my position in this purple shaded area. I waited for more opportunities to present, so for me to go short. So here, right, we're identifying a buying dealing range. So we have buy side liquidity taken. What's next? We got to look for sell side liquidity to be taken. Right here, we have lows, right? And even a low, just as little as that, can count as a dealing range, as a low being taken to create a dealing range, because look at the movement that we got from sell side liquidity being taken, right? Price takes out the low, we have explosive price action to the upside after taking out this low. I don't know why price did that after taking out this low or these lows down here, but that's just how the algorithm works. All right. I can't really explain it. I'm not the robot. I'm not the algorithm. I'm not the market maker. I'm just the trader who sees it. All right. So now, same thing goes. What are we looking for? I believe price. I think price traded higher on this year, because like the 830, that's when we had like that move to the upside on going into 830. I think. Hold on 1 second. Let me just make sure. Okay, cool. Yeah. So it was this. So price did trade higher than on the first initial dealing range. So that's why I was just looking at it like, all right. So here we have buy side liquidity taken. So here is our dealing range. Right, because price, we only want to trade or buy when price is in a discount. Price almost traded to the 62%. That's where we'll be looking to go long. And why we'll be looking to go long there, we have a fair value gap that price creates. So this is where we'll be looking to enter the market. Right, stop loss goes right below that low. And take profit as soon as price trades into this bearish fair value gap on the 1 hour. Right, so now we're waiting. Price enters us in. It starts to buy up. Right, so this is one dealing range. Now here's the second example. Right, keep in mind we have the buy down here based out of this dealing range. Now we have another dealing range that price creates using the same price action. So let me just do this for y'all real quick. So here, right, we have one dealing range price trades out of. Right, and now we have another dealing range. Here, price, we take out sell side liquidity, right, for increased displacement. We have buy side liquidity taken. Right, and also price, keep in mind, we took out these highs as well. So it's not just using one specific, area of liquidity. It's just combining all of these highs together that price takes out and using that as your dealing range. So now, right, let's move this out the way. That was the second dealing range. Here is the third dealing range. So here, y'all, right, we have sell side liquidity taken, and we have buy side liquidity taken. Now you may be looking at this right here as your dealing range, but the reason why I was looking at this as my dealing range is because I'm looking at the 5 minute, right? And at the 5 minute, right, I just see this as, all right, this was a liquidity run. Price most likely is just going to trade right through it. There was like a news there was news that came out on October 6th at 8:30. I don't remember recall which one it was specifically, but that's why we had this move to the upside. But I was looking at this high and this low as my dealing range for buys and a discount, right? So what do we do now? Now that we have our dealing range formed, we look for fair value gaps, or I look for fair value gaps that's in a discount for buys. So here, this is a deep discount, right? Stop loss goes right below that low. And where I'm taking profit at is as soon as price trades right into this fair value gap, right? Because this is where I'm looking for price to sell off at. So now we wait, and keep in mind time and price, right? This is during New York session. You only want to trade your dealing ranges. Well, I only trade my dealing ranges during New York session. All right. I don't trade before New York session. So like before 8:30 on the indices. I can find a setup before 8:30. Sometimes I do, sometimes I don't. Higher probability setups are found, between 8:30 and 11 o'clock, 11 a.m. Eastern Standard Time or New York time. So we want to keep in mind the time. I'm just going to use a vertical line to show where the 9:30 open is at. Right, the 9:30 a.m. open is the New York Stock Exchange open, for those who do not know. So now I can actually extend these to the right. So now I'm waiting for that 9:30 open, right? And as you see right here, 9:30 open, price trades right down into that fair value gap and starts to buy up. Right, and just like that, 200 points, well, about 205 points in 13 minutes. So 2,000 pips in 13 minutes, y'all. Just like that, using this concept. And I wasn't able to find a sell entry out of this price action at that time, but we're not going to go over that. All right, I do have entries that I've taken. So let me go to it. So you can see the dates. So let me go to the buy that I just showed y'all right here. Where is this at? Oh, that was a sell. Right, here's the buy. Right, I don't know if you guys can see it, but at the bottom, that's where I bought. Right, I had another sell. Right, this is the first sell dealing range that I showed y'all as well. Right, we have more using the dealing range concept. More using the dealing range concept. Right, October 4th. Another one. Well, this is the same trade from October 4th. Right, November, not November, September 26th. Another one. Just like that. Right, another one, September 21st. Right, up 330 points with two positions. So that's about 660 points between those two positions. Right, so just making everything as simple as possible using this. Right, another sell. Right, now it's the 13th. This is when I started. And ever since then, price, I haven't been taking any losing trades. And that's just me, because I understand I back tested this concept a lot, day in, day out, just so I can see and practice it, train my eyes to always see this setup, whether it be for a buy or for a sell. So when I do see that setup, I understand what I'm doing. I know where to get in, where to get out. If I take a loss, I take a loss. I simply just wait for the next dealing range to be created. There's always a dealing range to be created, whether it be today or tomorrow, sometime during the week, on whatever time frame you look at, there's always going to be a dealing range to be created. Right. But with that being said, y'all, that is the end of the video. I hope I have helped, some people who may need help with this concept, or if you're not consistent just yet, hopefully this video can, get you some understanding or a better understanding of, how to become more consistent. All right. But with that being said, y'all, that is the end of the video. I hope we all have an amazing trading week and amazing trading journey and continue to grow, at least 1% a day.